And we are live. Everybody, welcome to The Superlative. I'm your host, Edward Bushi. Every episode, one guest, a founder, investor, operator, or someone who's built or competed at a level most people only read about. The conversation covers their journey, what they discovered along the way that most people never get to hear, and where they think their field is going. No edits, no post production, just one sharp conversation live, and let's get into it. So, Matt, um, you walked away from a $20 billion hedge fund data operation where you were building data infrastructure for one of the most sophisticated allocators in the world to back companies, and you moved into backing companies that build infrastructure for everyone else. Before we get into your story, in two sentences, what is social leverage, and what are you building right now?
Social Leverage is a seed stage venture capital firm. So we invest in the earliest stages of fintech and vertical AI companies. And right now we're investing out of our sixth fund and continuing to find founders across the US and Canada.
Wow, that's an amazing track record to be at the sixth fund. So we're gonna park that. So we just want to get into a little bit of a backstory, right? So you started at Bloomberg in analytics, not the most obvious launchpad for someone who ends up as a chief data scientist at a big hedge fund. What were you actually learning at Bloomberg that nobody on the outside could see?
I mean, I think Bloomberg, even to this day, is probably a great place for somebody to start their career, especially if you want to learn the markets. I mean, it's probably the only financial market software that covers every single asset class, right? And they have hundreds of thousands of users around the world, and they put us at the time on like their help desk, and this was before like you really had AI, so I'm sure it's much easier now. But back then, it was you sit on the other side of this help desk that you can push on your keyboard, and you got to be able to answer any question anybody in Wall Street in the financial world might ask you that has a Bloomberg terminal. So it could be anything from how do I value this exotic option to how do I chart a stock on a technical analysis to where are the fundamentals for Apple. They just reported earnings, and you got to know how to navigate the software and then like really get into the nitty gritty of every single asset class.
That's kind of interesting. So you're in a rough way of saying it, you were like their chat GPT for like how to figure out how to use this machine and get the output that they wanted.
Yeah, and like I think I loved it because it was like endless answers, endless questions, and like it could be as difficult as really complicated math and how does the Black-Scholes model work, or how do you use swaps or CDS to talking about commodities. And I think that it allowed you to kind of figure out what you wanted to focus on if you were in the financial markets, right? Like I think I gravitated toward the equity markets and the derivative markets, and but I also really liked the alternative stuff. So it was a great starting point, and they do endless trainings there, so they really
Yeah.
do knowledge sharing.
Yeah. Talking about knowledge sharing, I can imagine you were learning from them asking you how about new ways of looking at the world, right? Like new ways of like looking at data and trying to model something.
Yeah, I think that you're 24/7, right, for Bloomberg. So
Yeah.
from Asia to Europe to the US and Latin America, they're always on. You're hearing about everything happening in the markets. And like I was there during the financial crisis, so like obviously like CDS and what was going on with CDO squareds and all this like stuff that was taking down like the real estate market and everything that happened. And I think the nice thing also about Bloomberg is they hired a lot of ex Wall Street guys that came with 20 to 30 years of experience and were there teaching the younger generation and helping improve the product, and kind of were those like application specialists.
Yeah. So you from Bloomberg, right? You moved into WorldQuant, one of the most secretive quantitative firms on the planet. Did operating inside a firm like this teach you the difference between data that people think is valuable and data that actually move markets?
Absolutely. I mean, I think when you move from a data vendor to a hedge fund, you actually like realize what it actually is like on the other side, and like there's a lot more details that you maybe overlook, not knowing what it's like to be on the other side. within a firm. We evaluated over my time there thousands upon thousands of vendors and their data sets. And so like I had a, led a team that really got to decide and manage, what was the most valuable data for us, how we were using it, what it really did for us, and ultimately negotiating those contracts and finding those companies.
So it seems like you like while working at WorldQuant, right? You found some really interesting like insights of what like makes companies grow. Like, is there a pattern to them, or is it like different from case to case? And it's a fact finding operation.
I think you got to think of, for quantitative hedge funds, like maybe it's not about what makes companies grow, right? Because I don't think a quant doesn't think about a company. Nobody's sitting inside of WorldQuant talking about like Nvidia and Apple and like, looks like Lululemon is breaking out. Like everybody's just thinking about, we're going long and short 500 to 1,000 companies at a time. We have strategies that are human-based ideas, right? Like, hey, when this happens during earnings, you should go long, and if this happens, you should go short. But then there's all this generative, or in the world we live in now, like AI-based strategies where it's like pattern recognition, right? Where it doesn't make sense why we're doing one thing versus the other, but like we're following, deep back tests that we found patterns, and after long times of letting these things run out of sample, we put them into production. And so like if you think about it from like a WorldQuant perspective, there's millions of alphas that are being created by all these researchers. None of those alphas are being packaged by PMs into strategies with risk models and so forth to then actually deploy into the market.
Yeah. So like paint a picture for me, because I don't live in this world. Like when you learn something, or like when you create a strategy, does it have like, is it something that you have to act on very quickly, or do they have a shelf life, or are they like, oh, we found out something, use it forever?
I mean, all alpha has decay. I think some of the best strategies, stood the test of time, but like obviously, new data sets, new unique data sets have alpha, and that alpha decays as others find it or create similar strategies in the market. So I think like you're constantly having to replenish new alpha and new data sets. But there definitely are strategies that stand the test of time and, probably are still running today there.
So talking about strategies, right? You co-authored a book on option strategies for volatile markets. Most people who know their way around options, that's stay on the trading side. What made you want to write it rather than just use it?
It was very early in my career. When I worked at Bloomberg, I had met a professor and options trader named Richard Lehman, and he really led the way on the book. But we got to know each other, and I think from my derivative work at Bloomberg, doing options trading and valuations and structured products, he asked me to join him on writing it, and so it's really just around sharing insights and kinds of strategies people use.
Yeah, I'll definitely like keep it in mind for something to look at when it comes to it feels like a technical book, right?
Probably more technical. I mean, it's probably interesting for people that are doing trading strategies, leveraging options. I got to be honest, I don't know if I've looked at that book in
It's been a
15
while.
years, so
Yeah.
I don't know how relevant it is anymore.
Yeah, for sure. So like at this point, you learned a lot, right? Like from moving within multiple firms to where you are now. What would you describe, if you had to describe your edge in one sentence? Not social leverage's thesis. Like what's yours personally? Like what is it?
I mean, I think it's the experience having used invested in the financial markets, right? So I've been on the other side using these tools, and like I think like social leverage, like the name, we leverage our social networks, right? So I think like we're not just investing in a vacuum. We kind of reach out to people we trust to get, insights and, start to think about like, is this, where the world is moving?
Okay. So like one of the things that we chatted about earlier, right? We're chatting about prediction markets, right? You've been thinking about prediction markets, and you told me about how perpetuals are getting into it, right? Like most people in finance for now, it seems they still treat prediction markets as a curiosity. What are they missing that you're seeing?
I mean, prediction markets is something that's interested me for a while, just even going back to the world quant days when we used to look at some of the early prediction markets just as like a data set, right? I think now, you could call prediction markets like the news, right? It's like what's actually like driving what's happening, what's like, the top prediction markets are essentially like, what's the top media stories, right? I think I think there's a lot of value just for investors from that perspective, right? Like to get an understanding of where people think things are going. And I think the bigger opportunity is, I'm a big believer in the KPI markets and prediction markets. Like put sports aside, right? That's obviously a huge business in and of itself. And I'm not a
Like
sports gambling specialist. So like I don't have enough experience outside of like, liking to see my teams win. But if you think it from the financial markets and what Kalshi did with one of our portfolio companies, Fiscal.ai, is they launched the KPI market. So, on a quarterly basis, like how many Teslas is Elon actually going to deliver? How many Uber deliveries is Uber actually going to like pull off? How many DoorDash deliveries are going to get done? If you
make bets on that,
you can bet on that, and so or you predict. And,
okay, sorry.
And if you've ever worked on the buy side, like in an investment world, like all the pod shops, let alone all the larger hedge funds, like they're all spending all their time thinking about like what's going to happen at earnings, right? Company going to beat, or are they going to miss? And then like whether they get that right or not, the stock may go a different direction. There's guidance, there's the war going on, but what they're really good at and what alternative data was used for is understanding the KPIs of these companies. Like it's much easier to get a sense of how many gold subscribers is Robinhood going to have this quarter? How many Netflix subscribers are we going to see in the US versus India versus Latin America? Those numbers are much easier, maybe not much easier, but that's where the data science teams within hedge funds and the analysts are spending time forecasting, right? They're forecasting all those numbers to then help them figure out earnings and where the stock hopefully goes. Okay. And they all have their own belief that if they, add enough Netflix subscribers, like that's the thesis. So if you can now either use prediction markets to hedge or say, screw it, we don't know what's going to happen on earnings. We don't know, even if we get the number right and we predict it perfectly, the stock may go down because like, they don't have a good enough AI story. But like we know for a fact, Netflix US subscribers is going to beat the number that's on the prediction markets. Like, why not put hundreds of millions into that trade? And so like I think that's where the opportunity really is.
So you paint a picture of where analysts are using prediction markets to figure out to make predictions so that they can make better decisions on allocating capital, right? So, but the thing is, like, the prediction market mechanism could be the main mechanism itself. Do you think that it will just you'll move into moving that into the future? Or
I think it's like the options markets and the futures markets. I think prediction markets, like focusing on like the financial prediction markets, like obviously sports is a different animal, and so is like betting on the Emmys and like what's happening on Spotify. But like if you just think of the core KPIs that all these public companies are reporting, like what drives the growth of Spotify? It's probably subscribers, right? People care about how many subscribers you're gonna have. Obviously, a new product.
How long they listen to.
Yeah, all those things, but like all those numbers are reported numbers, right? And companies like Fiscal.ai are delivering those structured KPIs, with accuracy and speed. And so Kalshi can then make markets on those. Like that's an unbelievable opportunity for hedge funds. Like they have these really expensive data science teams. Everybody's spending hundreds of millions of dollars buying all these unique alternative data assets, right? Yeah. And so they'll use a platform like CarbonArc or all these other different platforms that are helping people like better dig into all of this unique data. Why are we, going long and short a company during earnings based off of hoping they beat earnings when we could go long and short the KPI that we have 85% confidence in, right? Like if we've been accurate, 10 out of the last 11 quarters on, beat or miss on the KPI, why not put our money there?
That's really like fascinating, because like when you say KPIs and making predictions around them, any company has a KPI, or even like agriculture, like how many chickens, for example, could produce in a day. So any industry could be like working in a
I
prediction
think
market.
you need to have like a data source, right? That's
Of
like
course, yeah.
the source of truth. Like Kalshi picked fiscal, right? As like, hey, when the numbers come out, Uber
Yes.
actually did 2 million rides this quarter instead of 2.2 million. So they underachieved, and fiscal delivered that data to Kalshi within, a minute of, earnings being reported, right?
Yeah.
And I think
You,
those are better for prediction markets to be trading than like how many times is Tim Cook gonna say, the word iPhone on an earnings call?
yes. Because it's silly. And
Yeah.
it's like you're saying that they need a prediction market can work reliably when there's an authoritative source that could
Right.
say, yes, this thing did this.
A trusted,
Yeah.
authoritative source that's been vetted by, multiple people. And,
Yeah.
obviously there's other vendors out there doing similar things, but, we've chosen what we think is got the best accuracy, depth, breadth, speed.
Yeah.
And then obviously you can get into pricing and terms and conditions.
Gotcha. So I want to get into perpetual prediction markets, right? I know long and short when it comes to stocks, but how does that work with prediction markets? Like, and what's the game changer there from your perspective?
I mean, I think Kalshi and Polymarket announcing perpetuals is just obviously a new opportunity for them, more revenue, and I think
From
it
the fees?
changes. Yeah, more fees. Like obviously, it's done really well overseas. I think anybody investing in it around the financial markets has been hearing about perpetuals for a long time. I think it just takes away that the time piece, right? Like it's not like by a specific day. Like in the futures market, you're always rolling your futures to the next contract. With perpetuals, it just is forever. And
Hmm.
so, like, I think for Kalshi and Polymarket, obviously, there's a lot of opportunity with some of the markets that they make where you can have like perpetuals where there isn't
Yeah.
like a time constraint there. So I think it's natural. Like, I mean, if Kalshi and Polymarket are going to continue raising as much as they have and at the valuations they're doing, they're going to have to become exchanges with a lot of different products over time. I think like the parlays or the combos obviously are big as well.
Yeah.
But that's more of a sports betting thing. But I do think that that's kind of cool if you think about it across asset classes, right? Like a
Mm.
sophisticated trade, like Tesla beats earnings, the 49ers win the Super Bowl, and Steph Curry wins another championship before he retires,
Or
right?
he made this many shots at the end of the season or something like
Right.
that.
50
Yeah.
bucks to win 50 million.
Uh, yep. You can get those kind of odds. It's crazy.
Yeah.
So another thing that stuck with me from our last conversation is agentic commerce, right? Is that like I'd love to know like how you think that it all fits in, because we chatted about prediction markets, we talked about quantitative stuff. How do agents fit in to your vision of how things can work?
Yeah, I mean, listen, I think there's smarter people than me in the agentic payment space, but I do think that if you think about all of us building all these agents and agentic solutions, like even at Social Leverage, we're building all of these skills and agents with Claude so that our back office, middle office, and then a lot of the grunt work is automated. Like there's a world where my agent needs access to data that I don't currently have, right? It should have a wallet
Yeah.
and I should be able to tell it, listen, you can spend up to $1,000 a month buying what you need to answer the questions and do the tasks that I've asked you to do. Right. And so that's no different than like you have a ramp or a Brex card and like you give your employees the credit card and tell them like anything under $100, like they don't have to get approval for, right? Or
Oh.
they can spend up to $1,000 a month without like, their manager having to review the charges. Just think about that same capability for like agentic AI.
So like if I were to like um rehash that, right? It sounds like in without agents, right? You would have analysts and like maybe interns, right? They would go around and sleuth the internet. They would have paywalls and then pay for it to get the thing they need, and they would have a budget to execute a task. But agents would be the one doing it, and you would need of course you just need to fund it with stable coins or something.
Yeah,
But
like a
yeah,
stablecoin wallet that has like programmatic capabilities in it. I mean, I used to think about like as an analyst at a fund, if it's a hedge fund, and it has an AI agent that works for it, and just think about it as like a chat bot, and it gets in the morning and says like, diving deeper into doing analysis on Starbucks, like get me up to speed on everything that is happening with Starbucks, and I'd also like to better understand all the private companies that Starbucks potentially should acquire in the coffee space. Who's the fastest growing like coffee chains that are private? Your agent goes out, it starts to do it work. Maybe it doesn't have access to private markets data, right? It's only
no, it
used to
doesn't.
doing
Yeah,
public stuff, but it has sources it's found, and for $5,000, it can buy all the data that it needs to do a full analysis. And as a senior analyst, you have a budget of $200,000 a quarter for buying data. Your agent doesn't even have to get approval. It just goes and does what it needs. It buys it,
yeah,
it pulls the API, it structures it, pushes it back to you. I think like that is like the future. And it's like, it goes into the world of like consumption-based pricing and, usage-based and outcome-based pricing, which is where a lot of people want things to move, right? If you're buying data, why do we have to buy a contract for data for $200,000 for the year for everything? Why can't I spend a couple bucks a day for what I need? And maybe one day I wake up and I need to spend $400,000 worth,
yeah. Pay as
right?
you go when you need it.
Pay as you go.
Yeah,
What you need when you need it.
yeah, yeah. So like when uh at our company, right, we use like agents, but to like build like interfaces and websites and stuff like that. I even use agents to build the podcast website, right? It's like, what is like, do you set up your own agents, or do you like, what's the are I'm trying to imagine like what the lift is on your side, and what challenges you face when you're trying to set up your own AI.
I mean, listen, I think you got to just really dive deep into it and get your
Yeah.
hands dirty to learn it. Our team has definitely gone from using ChatGPT and Gemini to going all in on Claude and linking all the MCP plugins that we have access to, building skills and agents. And I think at this point, like we're building almost everything ourselves.
Mm.
That being said, like I do believe that there's a lot of AI tools out there that are like $100 a month, and like why build it yourself when if it breaks, is it worth that much time to fix it? Depends on what the use case is. I have
Yeah,
a lot of founders that use stuff that's $100 a month for like AI agent SDR that does like LinkedIn and email outreach for them, follows up, books meetings, and like it's great. I use Blockit AI, which is like an executive assistant, handles my calendar. Could I build Claude agents that kind of do the same thing? Maybe, but I actually asked Claude its opinion on building it versus should I buy this thing, and it
Mm.
walked me through all the complexities of what I'd have to do.
yeah.
And I actually feel like Claude convinced me that I shouldn't build it. It was like, listen, like you could, but like you have a day job, and like an executive assistant should cost you X, but if you do it with AI, it's only going to cost this much. And like
Yeah, yeah,
you're taking 50 meetings a week, like you don't have the time and energy to have mistakes.
yeah, yeah. And sometimes like you need to really like take a really good amount of time to like train the AI on a human on on how the workflow works in a company. So yeah, you gave us a 2 sentence version on the top of what you do at Social Leverage. Like what is the company backing, and why does it matter now?
I mean, I'll talk about from my side, but like there's four of us as partners. I mean,
Yeah.
I'm focused mostly on fintech and like data and information services companies, which would be like all the data companies powering the world these days. But we also do vertical AI, which is, I would say, where vertical SaaS has kind of gone to, which is, AI for very specific industries and subsectors. We're investing at the earliest stage. So companies that are just starting, they have a product, a couple clients and some revenue, we'll invest $1 to $2 million. We're hands-on, we'll typically take a board seat. For us on the fintech side, like we look at B2B, we look at B2C. I think consumer has been harder and harder to find the next breakout. Credit my partners Howard and Tom for being first investors in Robinhood and eToro and Alpaca. And so we've kind of seen everything in the retail space. And so I would say the last 5 years have been much more B2B, companies that are building technology for wealth management, compliance. We're still doing stuff in and around the investing space, the data world, but less pure consumer stuff outside of maybe one or two companies.
It's really cool that you mentioned Robinhood. Like in Toronto, where we're based right now, there's a company called WonderFi, right? That's during working out the acquisition of Robinhood's working out an acquisition of WonderFi. So yeah, it's one of the big stories here in the fintech space in Toronto.
Yep. Fiscal.ai and Ribbon, two of our portfolio companies, are actually based in Toronto as well.
Oh wow!
Yeah.
Nice. That maybe I'd love to get introduced to them and even have them on the podcast as well.
Yeah, absolutely.
Yeah. So we're coming into the end of the podcast. I want to slow down the train, but I have one question, right? Just to close things off from your side. So if agents and not humans become the dominant market participants in prediction markets within the next 3 years, what does that require of the data layer, and that does not exist today? Just from your point of view, and what's it say about human operators, I guess?
I mean, listen, I think the data being available through MCP plugins, which is obviously the way that we can get it into Claude and ChatGPT, I think is a must. I think the best data companies have already done that and are continuing to add more and more features. I think the way data is, collected, cleaned, delivered, and ultimately the largest companies in the world are having to rethink everything, right? If you're an AI native company building these data operations now, you don't need tens of thousands of people offshore, right? Things can be done 50 people, 100 people.
Yeah.
And that's a huge operation, right? You have 50 to 100 people with 5 to 6 layers of AI agents doing QA and analysis before maybe there's a human intervention to just, triple check a number potentially.
Yeah.
I think the revenue per head count potential of a data company is astronomical. And I also do think that consumption-based pricing is the future.
Yeah. You could make a one person be worth 100 people with having AI agents work underneath them.
Yeah, I think we start with 10x, but 100x.
10x, sorry, yeah. Of course, yeah. But moonshots.
Yeah, exactly.
Okay, so Matt, I just want to say really thank you so much for taking your time and sharing with us your insights about what you do at Social Leverage, and also teaching me a few things about prediction markets and agents and how you set it up. So I really appreciate that. I know the viewers will also appreciate that when they'll watch this on Twitter and on YouTube. So yeah, at that, thank you so much, and we are going to end the stream now. All right.
Thank you.